to Linda to begin.
Thank you so much, Bob. Thank you for being the moderator and for the webinar orientation and introduction. Hi, I'm Linda Wang, National Timber Tax Specialist from U.S. Forest Service. It's tax season, and this year the deadline for sending in your tax return is April 18th. 3 more days than the usual April 15th. My job today is to help you with your timber tax reporting on your tax return. Most of the tax professionals and preparers are not familiar with timber tax reporting because they do not specialize in this area, and they may not know timber operations. So it's very important for our forestry owners, loggers, timber manufacturing business, foresters, tax accountant, attorneys involved in timber business transactions to know the tax law and tax rules on timber. So in the next hour, let's concentrate on this learning. On questions, I do have a suggestion that you focus on the presentation and quickly jot down the questions on a notepad rather than typing in the chat window, because I don't want you to be distracted by the chat window. I'd rather you focus on listening to the presentation and get the ideas first. And as you know, the tax law can be complicated. And at the end of the webinar, if your questions are still not addressed by the presentation, you can type in your questions through the chat window. I'll answer your questions then. Or you can email or call me and I'll answer your questions through email or call. So I will not answer your questions during the middle of the presentation because time is tight and we do have quite a bit to cover today. Let me thank our partners for today's webinar: NC State University's Extension Forest Resources, Southern Regional Extension Forestry Office, and Texas AgriLife Extension Services, and many other university and extension partners. So today's discussion is educational. They are not legal or accounting advice. This is what we're going to talk about today. The first part is timber tax reporting. This part here, we're going to cover several topics. The first one is called reporting timber sales, and that's a very important topic for many people. And next topic is we're going to find out who are required or not required to file Form T timber. Yes, this is a tax form, and it's called Form T. And then we'll discuss the Form 1099 reporting on timber sales. We'll find out who are required to file and what's the requirement on this. The next topic is deductible expenses. We will go over what kind of expenses can you deduct and how do you qualify for such kind of expenses. This year in 2016, we do have quite a bit request on tax treatment of casualty and theft loss of timber. As you know, many landowners suffer timber loss from fire and storms, and they want to know if they can take a tax deduction as a casualty. And then if you have a reforestation cost, the tax law gives you a special kind of deduction on reforestation. And the second part of the presentation is a special topic. As you know, tax reform is one of the top priorities for our new administration and Congress. We will cover some of the major tax reform issues facing forest owners and forest industries. And then at the bonus part, we will go over the record-keeping rules. First, we do need to talk about one of the most fundamental questions when you deal with timber tax, and that is your timberland ownership for tax purpose. So if you own your timberland, the main purpose is not to generate profit, but for personal enjoyment. then for tax purpose, your property is classified as personal property. Examples of personal enjoyment could be hunting, fishing, family retreat, and the main disadvantage of personal property is that in general, if you have loss from personal property, the loss is not deductible. What is a loss? A loss is when the income from the property is exceeded by your deduction. In other words, your tax deductions may be very limited for this category. Now, if your main purpose of owning your woodland is for generating profit from growing timber, you can still have personal enjoyment, by the way, but your main purpose is to producing income from timber, then your woodland is classified as investment property. Investment property enjoys favorable tax treatment, and that is you may deduct timber expenses, but compared to business property, that deduction is within a set limitations. And the third category is if your main purpose of owning your woodland is for generating profit and your activity is more regular, frequent than an investment, then you may be classified as timber business for tax purpose. The main advantage of business classification is that you get to take deductions fully if you meet the requirement. So profit motives are very important here, and that depends on a number of factors. And there's no black and white clear-cut rules to say this landowner is the investment, that landowner is a business property. It depends on your individual situations. So the factors can include whether the time and effort you put into the activity indicate an intention to make a profit, whether you depend income from the activity, which probably is rare these days, whether you change your advisor or your operation, for example, hiring consulting forester who have the knowledge to carry on the activity as a profitable activity. And the other point is that profit also include asset appreciation. You must prove your for-profit motive in case of an audit. So the burden is on you to prove that. Now let's look at reporting timber sale. Let me ask you, do you know capital gains when we talk about timber sales? Because not all income are subject to the same tax rates. There are two types of main income. Ordinary income is subject to a tax rate anywhere from 10% to a maximum of 39.6%. What is ordinary income? They include your salary, wage, your Social Security income. Those are taxed as ordinary income. Now, if your income qualifies for what's called long-term capital gains, the tax rates range from 0% to a maximum of 20%. Long-term means owning your property for more than 1 year before you sell it. So as you can see, there are anywhere between 39.6%, the maximum difference between the tax rate on these two types of income. Now, when we look at timber sale, does timber sale qualify for long-term capital gains? This is what the tax law says on different type of land ownership and different way of selling your timber. It depends on those two factors and how long you own your timber. So under the tax law, it says sale of standing timber held as an investment is a capital gain. You report the sale on Form 1040 Schedule D. If you hold your timber for more than 1 year, it's a long term. and you will report that on Schedule D. If it's a short-term capital gain, even if it is capital gain, but if it's a short-term, it's still subject to the ordinary income tax rate. So that's the difference there. It's very important to own your timber for more than 1 year if you purchase your timber. And then you also file Form 8949. That's a detailed supplement to Form 1040 Schedule D. What about reporting timber sale if you are in timber business classification? Well, that depends on if you sell standing timber versus the cut timber, the timber that's been felled. Let's look at sale of standing timber in a business. It is capital gain if it's held for more than 1 year. And this is what's in the tax code section 631A, 631B, excuse me. So sale of standing timber under this code section in a business, if you hold it for more than 1 year, qualify for capital gains. You report the sale on Form 4797, and then it'll transfer to Schedule D. Next, let's look at if you sold timber. Not only you did not sell timber only on the stand while the timber is still standing, you're also involved in what's called cut and hauling. So in this type of transaction, you're also involved cutting and hauling part, not only just the standing timber sale. In this case, all gains are ordinary income unless a Section 631A election is made. So what is Section 631A? Basically, what this means is that the income that's attributable to standing timber appreciation are still capital gains. Any income that's attributable to cutting and hauling to the mill, that's ordinary income. So there are two types of income involved here. Now, in order to qualify the standing timber appreciation for capital gain, what you do is you make a Section 631A election by checking the yes box on Form T. Here, you need to file Form T to make that election. And then for the capital gain portion, you report on Form 4797. And then for the ordinary income portion from cutting and hauling, you report on 1040 Schedule C. All right. What kind of deduction can you take when you have a timber sale? Well, there's a deduction is called depletion. You take the depletion from your timber sale proceeds. Depletion is calculated using the timber basis. Now, let's look at what is timber basis. It depends on how you acquired your property. For purchased property, let's see here, trying to draw a circle, but anyway, for purchased property, your timber basis is the cost that you paid for the property. But it's different for inherited property. If you inherited the property, your timber basis is going to be the fair market value of the timber on the date of the decedent's death. As you can see, the definition for basis are different for these two type of property that you acquire through different method. Now let's look at an example of what a timber and land basis look like. These numbers are all made up just for illustration purpose. I want you to notice there are 2 points here, a couple of points here, is that the basis for the land and timber are separate. Land is not depreciable the timber is. The depreciation for timber, the idea is basically called depletion. It's comparable to depreciation of your equipment. But for timber, it'll be called depletion. The second point here is, as you can see, for timber product, you have a saw timber and you have pulpwood. Those two, the basis must be separately documented. The reason is because they are valued differently. For in this example, saw timber is 100,000 board feet with a basis of 20,000, and the pulpwood is 1,000 cords. See, their unit of measurement are different, and but in the southern part of the U.S., you could all use tons. Even if that's the case, saw timber in general is more valuable than pulpwood. So your bases are different for those two. Now those two, the saw timber and pulpwood, they're different assets. When you sell only saw timber, you only recover depletion on your saw timber. And so this is an example of what a correctly set up timber and land basis look like. Okay. Now here is a quiz. It says, if I inherited the timber property 10 years ago, does this mean I have to go back 10 years to estimate the fair market value of my timber to set up my timber basis? You can go ahead and make your selection on that fourth button under your name. So this question was asked very often, is that I have not set up my basis, but I inherited the property 10 years ago, 20 years ago. How do I set up my basis? Can I hire a forester to give me an estimate based on today's value? Well, the answer here we got, okay, most people, we got 39% of the people got it right, and most people are probably not sure. Remember, the definition of basis for inherited property is the fair market value on the date of the decedent's death. So if you inherited the property 10 years ago, the fair market value on the date of decedent death 10 years ago, that value is your timber basis. Now, if you haven't set it up and the tax law lets you to estimate retroactively to set up your basis, you can work with the consulting forester. They can do a timber cruise based on today's volume and research 10 years ago what was the volume back then and what was the price back then, that they can come up with a professional estimate of the timber value back then. That would be your basis. So here is a important tip, is that if you think your timber basis 10 years ago, 20 years ago is very low, it may not be worthwhile to spend money to set up the basis because your tax deduction may be very little. It may not justify the expense to set it up. And the advantage of setting it up is that it lets you take a deduction for depletion when you sell timber. And when we go over the casualty loss part, is that if you don't have timber basis, then your deduction is very limited too. All right. Continue on in reporting timber sales for high income taxpayer, and we'll define what is that. There's another additional tax, which is 3.8% on your timber sale. This is not only applicable to timber sale, this 3.8% net investment income tax. It applies to high income taxpayers, capital gains, dividend, passive business income, any of those investment type of income or passive business income. Now, how to calculate the 3.8% income tax is that it's imposed on the lesser of your net investment income or the excess amount of your modified adjusted gross income, just your adjusted gross income modified by certain items. If your adjusted gross income is over $200,000, that's for a single taxpayer, or $250,000 for married joint filers, that tax is imposed on the lesser of these two amounts. So let me show you an example how it's calculated here. This is, again, a hypothetical example for illustration purpose. Here, the husband and the wife had $270,000 adjusted gross income, including $50,000 capital gains. So this means they have a regular income of $220,000, but they also have a $50,000 capital gains. Let's see if they are subject to the 3.8% tax here. If you calculate the excess amount of $270,000 because they're married filing joint, the threshold amount is $250,000. 270 minus 250 is $20,000, and the 3.8% tax is imposed on the lesser of $50,000 capital gain or $20,000. So in this case, the tax is on $20,000. 3.8% of $20,000 is an additional tax of $760. And this tax is applied to timber sale as an investment, or if you're in the business category, but we didn't go over that if you're a material participant, you're not subject to this tax. If you're a passive business owner, when you sell timber, your timber sale also subject to the 3.8% tax if you meet the income requirement here, the threshold here. Okay, all right. So here is another quiz here. If your adjusted gross income is less than $200,000, your capital gains are not subject to the 3.8% net investment income tax. Is this true or false? Okay, so the 3.8% net investment income tax applies only to people who earns more than the threshold amount. And so if you're a single taxpayer or you're married filing joint, if your adjusted gross income is less than $200,000, then you're not subject to the 3.8% tax based on the calculation. Alrighty, so you don't need to worry about this tax if your income is less than the threshold here. Okay. Continuing on reporting timber sale is we need to decide whether we're required to file what's called Form T timber. This is an informational tax return. It's called Forestry Activity Schedule. The tax form have 5 parts. First part is acquisition, is when you inherited the property or when you purchased the property or someone gifted the property to you. This is the part 1. The second part is timber depletion. We didn't show you how to calculate the depletion, but I'm going to show you some examples and reading material later for this if you need to calculate this. The main point here is that we want you to set up your basis in order to calculate the depletion if it's worthwhile to set it up. Like I said, if you inherited the property a long time ago, and there's probably young timber back then, your basis may be very low. But if you purchase a property recently, definitely it's one of the first priority is to start to set up your basis. The third part of Form T is profit or loss from land and timber sale. Fourth part is reforestation and timber stand activities. Ownership, the last part, is when you sell the land. That's when the ownership starts to change. That's the part to document the land sale. So who must file Form T? According to the instruction for Form T, you complete Form T only if you, under these three conditions, you claim depletion deduction of your timber. So if you set up your basis claim depletion deduction of your timber, you may be required to file. Or if you sell felled timber in the business, that's a Section 631A transaction, that the two-part income. Or you sell timber outright in the timber business. You sell timber outright, whether you sell timber outright or pay as cut. If you sell timber pay as cut, you are not required to file. But if you sell timber outright in the timber business for a lump sum amount, then you're required to file Form T. However, there are exceptions to this general rule. The exceptions are, if you're an occasional timber sellers, you are not required to file. So who are occasional timber sellers? It is defined as 1 or 2 sales every 3 or 4 years. And so if you sell timber once probably in your lifetime or twice in your lifetime, you fit into this occasional timber seller, you're not required to file. However, based on our conversation with Internal Revenue Service, they said it is prudent to file, even if you're not required to file, but it's prudent to file when you claim depletion deduction or if you sell business timber. Even if you're not required to file, it's still a good idea to fill the Form T and cap Form T as part of your tax record. That's a very important tax record to keep. But it's probably only 4-page. I think it's 4 or 4 page. But it does take quite a bit of understanding of timber business to fill the form. And I do suggest you work with a consulting forester as well as your tax accountant to set it up. The next topic is this tax form called Form 1099-S. This form is if you sold timber, as the owner of the timber, you sold the timber, you are not required to issue this form. Instead, you're supposed to be given this form and you file your tax using the information on 1099-S, and you're not required to issue this form. This form is a form to report real estate transactions, and it is required for standing timber sales. So whether you conduct timber sale in a lump sum amount or pay as cut, Form 1099-S is required for timber sales. If you receive a Form 1099 miscellaneous or there are many types of 1099. That's okay, as long as you reported your sale on your tax return. What kind of form is not that important. It's not the substance. The substance is if you report the income on your tax return, and that's the main thing. So you don't need to worry too much on the 1099-S or miscellaneous. There's another point is when you receive your Form 1099, be sure to check the tax year and also the amount, the proceeds of sale for your timber, because they could make a mistake. If you find the mistake early, you can still request to have the right amount, the right tax year sent to the Internal Revenue Service early enough. The Internal Revenue Service use 1099 to match your tax return to see if you report the income on your return or not. If sometimes they do make a mistake of reporting the wrong year or the wrong amount, it's very important to check the numbers. Who are required to issue Form 1099-S? As we said, 1099-S is mainly geared, all the language are for reporting real estate for your house, your commercial building. So the language here are mainly written for those real estate transactions. It doesn't really sometimes applicable to timber, but nonetheless, we are required to file Form 1099-F. So according to the instruction to the form, these 5 type of people are required to file in the order that is listed here. The first type of person that are required to file is the person including attorney or title company. So as you can see, this language are mainly written for real estate transaction. The person responsible for closing the transactions are the first that are required to file 1099. If we don't have that, then the second one is the mortgage lender. If you purchase timberland that has timber on it, if you take a loan to purchase the timberland, then the lender are required to issue Form 1099. What about the third one is the seller's broker. This is again the language for real estate. I'm not going to interpret who the seller's broker. I received a call from a landowner one time. She's telling me that her broker was helping her with selling timber. And so I said, you be careful about what term you use for the people who have professional knowledge about timber. But anyway, so the third one is called the seller's broker. I guess if you're involved in helping the sale, that's the third category. And the fourth is the buyer's broker. The fifth is the buyer. I think it's very important that one of the parties that involved in the transactions issue 1099, because there are penalties for not filing 1099 if it's required. Also, do not go to Internal Revenue Service website and download Form 1099-S and file that way, because there are penalties for form that's not scannable. The downloaded version are not scannable by the processing machines. So one way is to order 1-800-TAX form by calling that number to order this form. The other way is for a lot of volume issue. If you issue large volume of this, you buy a software that specifically meet the specification requirement for scanning by the Internal Revenue Service. That's another way to do this. And there are specific deadline for issuing 1099. Make sure to follow the deadline there. Alrighty. If you have for-profit motive, this is the requirement to take deductions. Like I said, for personal property expenses, personal expenses normally are not tax deductible. In order to deduct expenses, you have to have for-profit motive. So here are the examples: tools of short useful life or small cost, hand saws, etc. You hired labor, your fees that you paid for your consultant or your accounting, your lawyers. Property tax are deductible if for investment property. That would be if you take itemized deduction on Schedule A. For business property, that would be Schedule C. If you don't take itemized deduction for the year, you could elect to capitalize property tax, which means you put this amount on your book, and that's going to be part of your timber basis, the cost of owning timber. Then when you sell timber, you recover the cost, and that could be years down the road, but at least you don't lose the deduction. Other examples of deductible expenses are the cost of prescribed burning. Some parts of the country still use prescribed burning because it's beneficial to create a beneficial environment for wildlife management. The expenses of fire, insect disease control and protection, that's deductible expenses for managing your timber. If you do a road and fire break maintenance costs, that's also deductible. And your overnight travel expense to work on your property, conduct sales, those are all deductible. There are also other deductibles here for business taxpayers. So if you're an investment taxpayer, for example, the first one is called first year expensing deduction. It's also called Section 179 deduction. This deduction is available to taxpayers who are classified as business only. They are not available to investors. Under this tax code, you may expense up to $500,000, $500,000 that you spend on purchasing qualified equipment. For example, your tractors, for example, the computers that you bought that you use in the timber business. Those are all qualified for Section 179 deductions. The pickup truck that you bought that you use in, there are specific requirements whether the property that you bought qualifies. There are details on that, but the general idea is that it's subject to a $2,010,000 cost of purchase limitation. That means that if your purchase of the property of the equipment is more than that amount, then your deductions is reduced. Also, it's subject to your business income limitation. Bonus depreciation. This is an additional depreciation deduction. Now, depreciation, let's talk about depreciation. Depreciation is a deduction that's allowed when you purchase equipment to use for your timber investment or business. That's a regular depreciation. For example, if you build a temporary road and you can deduct the cost of temporary road over 15 years using depreciation deduction. And that's available for both investment and business property. Now, when we talk about the bonus depreciation, it is actually an additional first-year depreciation deduction. In addition to the regular deduction, like I said, the 15-year depreciation over the temporary road or the 5-year on your logging equipment is 5-year. That's in addition to the regular ones and also in addition to the first-year expensing deduction. And the calculation is that it's 50% of the cost of your eligible property or your adjusted basis of your eligible property. So these two deductions can add up to a significant number if your purchase qualifies. Now, let's look at where do you report your expense. For an investment timber property, you report the expense on Form 1040 Schedule A. Schedule A is itemized deduction. Yes, it's deductible, but it is subject to a 2% of your AGI floor. AGI is adjusted gross income floor. So if your adjusted gross income is high, 2% of your AGI is also high. That may be high enough to eliminate the deductions, even though it's deductible because of this limitation here. If you are classified as timber business, you have a certain advantage here. You report the expense on Form 1040 Schedule C if you materially participating in the business. If you materially participating is based on how many hours you participate in the business. For example, one of the first tests, if you participate in the business for more than 500 hours during the year. There are a couple of more tests. So if you're in the business category, you need to document how many hours you work, whether you qualify for material participate in the business or not. If you're passive participant in the business, your expenses are limited. Alrighty, let's talk about the casualty loss here. The amount of deduction is limited to the lesser of fair market value loss of your timber or the adjusted basis of your timber. So once again, if our basis is 0, even if we suffer the huge economic loss of timber, on tax return we cannot take any deductions. So it's important to set up your basis. Now, if the returns from a salvage harvest, court award, or insurance claim exceed your timber basis, you have a gain that may or may not be taxable. If you reinvest the gain back into your timberland, you may be defer the paying tax on that gain. Let's look at the rule for reforestation deduction. Here is the rule for reforestation. You can deduct outright the first $10,000 per year of qualifying expenses per qualified property. So if your reforestation is $8,000, you can deduct them all in the year of reforestation. What if your reforestation expenses over the $10,000? Then you may deduct, or what's called amortize. You can amortize any additional amount over that $10,000 over 84 months, affecting your 8-year tax returns. 84 months is divided by 12 is 7, but it'll affect your 8 years tax return because of accounting convention. And you can see, I'll give you the reference material on how to calculate in detail if you need to calculate this. How do you report your reforestation expense? You take the deduction on Form 1040 for investment property as an adjustment to your income. If you look at 1040, the first page, at the bottom there are a section that's called adjustment to your income. There's not a specific line for reforestation, but if any line you don't use, for example, your self-employment tax adjustment, you don't use that, you write that down here, take that deduction. For timber business, you take the deduction on Schedule C or Schedule F for a farm. So that would be a business expense. Now, you also, if you have more than $10,000, you need to make an election to amortize the reforestation expense on Form 4562. That's the depreciation depletion deduction form. You also need to attach a statement to your return. You can type in your computer or handwriting and attach to your return. You need to show the unique stand identification number. For a lot of industrial landowners and some of the sophisticated landowners, they have I guess a map and showing different stand, they have multiple stands, they number them. But if the requirement here is that you need to clearly delineate where is the reforested property, where is the boundary, and have specific boundaries. The total acres reforested, nature of the reforestation. Here it might be artificial, meaning you do a artificial regeneration is what we call. You hire people and they do a site preparation and machine do the reforestation typically. And or you can do a natural regeneration. You leave the seed trees and let the seed trees regenerate. Both type of regeneration qualifies. Total qualified expenditure, at least all of this showing this on your tax return. Let's look at the tax reform issues. As we said, top concern for our Congress here is the tax reform, but the details and the size of the tax reform are not set at this time. They're still working on it. These are the important issues facing forest landowners. The capital gains, the legislative status as of today is the House tax reform. They issued a blueprint last year in June. In that blueprint, they proposed to reduce the capital gain rates to half of the regular rates to be 6%, 12.5%, and 16.5%. All of the discussion here are based on the blueprint or the president's campaign tax reform proposal, because that's the only official document that's available, and the details and the size of the reform is not set. Nothing is in details here. The net investment income tax is 3.8%. The House blueprint proposed to repeal this tax. And federal estate tax, both the president campaign plan and also the House blueprint proposed to repeal estate gift tax and generation skipping transfer tax. And currently, our federal estate tax exemption is $5.45 million, which means if one leaves $5 million, they're less than the 5.45 million, then they're not required to file estate tax return. They are not subject to federal estate tax. I'm talking about at the federal level. You may be subject to the state estate or inheritance tax. For example, in Maryland, they have a lower threshold for filing returns. And so the estate planning are still important for a lot of reasons other than the tax portion. For example, the probate or the creditor protection, those are still important. And for our industrial taxpayers, one of the main issue is corporate tax rate. In the House blueprint, it was proposed to reduce the top corporate tax rate from 35% to 20%. And in our president's campaign tax plan, it was proposed to reduce to 15%. So these are all, I'm informing you about the potential changes that's coming. And for our very special type of tax entity, timber REITs. REITs is real estate investment trusts. A lot of our industrial landowner using this special tax entity to hold their timberland. And currently, qualified timber sales may be passed to shareholders as capital gain if qualified. And of course, this is very important for our timber REITs, and the ability to be able to maintain as timber REITs are very important for our timber REITs landowners. Alrighty. Here is the bonus part on our presentation, record keeping. Careful record keeping really helps, And I'm going to give you two examples. If one is challenged in the tax court, very good record keeping often is a deciding factor in a lot of cases, whether you can win against Internal Revenue Service or not. And I'm picking these two court cases from last year, the federal tax court, how they decided on these two cases. In the first case, the tax court judge ruled that Arizona couple with a landscaping business did not owe the Internal Revenue Service about $12,000 in penalty because they kept a very detailed record. And so, once again, one of the common thread in all these court cases, the judge will look at whether you're keeping a good record, whether you relied on a professional's advice. In this Arizona couple, they keep a good record, relied on professional advice. And the second case is a Missouri couple. They won a deduction against the Internal Revenue Service for nearly $7,000 of car and truck expenses for small business because they also relied on professional advice with a detailed record. Alrighty, so for our timberland property, what kind of records do we need to keep? First is the property acquisition record. That includes your map, your contract, maybe a estate tax return if you inherited the property from your parents, and their estate tax return may show a valuation of your timber. That would be very useful. Forest management plan, if, like we said, one of the best ways is to document your for-profit motive in forest management plan. That is a good tax record. Forest management activity, if you attend today's webinar trying to learn how to comply with the tax rule on timber, if you worked with a forester to do a thinning on your property, document those. Your property tax record, your travel expenses, that's very important, and your business meals and entertainment expenses, and that's for business, that's only deductible 50% of the expenses. All right, what kind of records? You know, I understand I need to keep acquisition record, but in what form? It could be in a contract form, receipt, the original receipt for a business meal, that's receipt from a restaurant. If you purchase a small tool, that would be from one of those places that sell those tools, those receipts, you keep those. Your statement, your 1099, your timber sale, any statement you receive, or even your credit card receipt that shows a purchase for managing a timber activity. Cancel check, your mileage logs or apps. Nowadays, people use apps to keep track of their mileage, and it's very good. When you do your taxes, it's calculated very well. You don't need to reorganize because it's already organized. But ideally, you keep a log and showing your driving mileage if you take the mileage deduction versus the depreciation deduction method. And you also keep an Excel spreadsheet or keep a journal. You can do it online, electronic version using Excel showing on what day I did what. Or you can just use a notepad, a notebook, and document all your activities. For business category, you need to document how many hours you participate in your business in order to qualify the material participation. How long to keep your record? Generally, keep your record for 3 years, and that's a very general rule. But if you didn't report the income, if you reported income by omit the income 25% or more, you're supposed to report, then the Internal Revenue Service can go after us 6 years after tax return. So keep the record for 6 years. But if you did not file the return that you're supposed to file, or file fraudulent return, they can go after us indefinitely. There's no what's called statute of limitation. You need to keep record indefinitely. So it's good to file. How long to keep your record related to the property specifically? You keep your record when you own the property, as long as you own your property, or in general, 3 years after you sold the property. But if you do exchanging 1031 exchange, you exchange your property instead of you sold your property, you keep the record of the property you give up, as well as the new property's record, until the new property is sold. So I would definitely encourage you to keep all the records for a long time. Okay, now we are going to wrap up our presentation with the summary. The first part is we wanted to make sure that we know our timberland ownership, what kind of ownership we are reporting for tax purpose. You need to decide that each year, the ownership status, because that determines how your timber is taxed. Then you must own your timber for more than 1 year to qualify for long-term capital gains. That's a general rule. Now, if you inherited the property, that you are automatically considered to own your timber long-term. So the inherited property do not have to meet this 1 year requirement. Occasional timber sellers are not required to file Form T, and then Form 1099-S are required for both lump sum and pay-as-cut timber sales. Set up and keep track of your timber basis, and that may take quite a while to do. Find the right people with the knowledge who can give you estimate of the timber volume and value. Now, the expenses are deductible for investment and business property. Remember to take your reforestation deduction. Remember that $10,000 threshold. If you have more than $10,000 reforestation, you'll need to amortize or deduct them over 84 months. It's a timing. You will deduct all of them, but it's just over a number of years. So keep very good record. Casualty loss. Yes, you can deduct a casualty loss, but it's limited to your timber basis. We also went over the major tax reform issues affecting the reason why tax reform is so important for our landowner and forestry industry, because it affects your financial decision, it affects forest investment, management level, therefore it affects the rural jobs and rural economy. The last one we talked about, the forest management plan, a part of the tax record, and keep your tax record and written record are the best. And oral record is okay, but we definitely don't recommend that. And we don't have normally that good memory, remembering all the details several years ago what we did. Written record are the best. So if you need more information, we have a publication. If you do a keyword search on the internet, Forest Service tax tips, this publication, tax tips for forest landowner for the 2016 tax year, it's a 2-pager. It shows calculations, examples. And then we have another publication. It's called Federal Income Tax or Timber, a quick guide for woodland owners. This one has more detailed information than the 2-pager, but still, hopefully, it's a quick read too. Unfortunately, we ran out of print copies a long time ago, and you can still get an online copy if you search the internet. I think at this point, that's the end of our webinar presentation. Thank you so much for your participation. I will answer your questions now, and I think Bob, for the next 15 minutes also, after that, Bob will help you to do a survey or a quiz, particularly if you want to get your continuing education credit. And after that, if you still have questions, I'm here. Or if you have to go somewhere, you can always call me or email me, and I will definitely try to help the best I can to answer your questions.